Welcome to the Fringe Benefits Group financial podcast series for business owners and key employees. Today's show is being hosted by Kevin Fringer, the founder of the Fringe Benefits Group. Good morning, Kevin.
Hey, good morning, Kelly. How are you doing today?
I'm doing well. How are you?
Excellent. Really excited to talk about today's topic, which is titled 5 Essential Documents Every Business Owner Should Have in Place. And Kelly, as a business advisor and transition consultant, and having spent 25 plus years advising business owners and key employees about their personal finances, I know there are 5 essential documents that every business owner should have, and that's what we're going to go through today. So let me just kind of start with just a simple list of what those 5 documents are, and then certainly we'll go into a little bit more detail on each one. So the 5 documents are as follows: a succession plan, exit plan, a valuation, growth and business plan, financial plan, and estate plan.
Kevin, I know people are often confused on the difference between a succession plan and an exit plan. Can you touch on that?
Absolutely. And that is a very common mistake or common thing that people to get confused. So let's just talk about what we know. First and foremost, the absolute that we know is that there is a 100% chance that every business owner will exit their business at some point, somehow, right? What we don't know is we don't know how. And it usually is going to fall into 1 or 2 scenarios. The first scenario is, will it be in what I like to call your ultimate and ideal scenario? That's more of what we refer to as an exit plan, something you've planned out and the timing and everything. And we'll talk more about that here in a second. But the succession plan is if you exit your business due to a death or health issue. That is what we call a succession plan. It can be easily argued that the succession plan is the most important, or at least the first document that needs to be put in place, because obviously it could go into effect for any of us tomorrow, right?
Unfortunately, yes, that's true, and we see it happen all too often.
So let's continue on and talk about some common characteristics that both succession plans and exit plans have. So first off is who. Do we know now who that person would be? Whether it's the succession or exit plan, have we identified who that person is going to be that would take over the business in an emergency, or again, in my ultimate exit plan? And is that an internal candidate or is it an external transfer? And most times, I'd say probably more often than not in today's world, it seems like there's a lot more external. And sometimes that's just by fault because there is no internal candidate, or there may be internal candidates, but they just don't have the financial wherewithal to actually purchase the business from the current owner. So, but if we're in a scenario where we do know who, whether it's internal or external, one of the key questions we like to ask is, are all the documents put in place? Are they all signed? Is everything executed? Is it all legal and ready to go? And another key question is it funded or unfunded? And what we mean by that is, especially in the succession scenario, are there life insurance or disability policies that back up that succession plan? So if something unfortunate does happen and things need to be kicked into place immediately, are there policies in place to help fund that succession? So, and if we don't know who, which I think is probably more common than not, we do suggest that we start trying to figure that out as soon as possible. Again, knowing that that succession plan could have to be kicked in at any point in time, we would certainly want the people that survive the business owner to know who's taking over and that everything was signed and buttoned up and ready to go. So that's kind of more on the succession side. Let me talk a little bit about the exit plan. And again, this is what we like to refer to as the ultimate and ideal scenario. Most often timed up with retirement, but obviously not all exit plans end up where the owner is completely retired at that point in time. They may just be wanting to exit this particular business, but maybe they have plans to start another business or to purchase another business themselves. But more often, when we are working with exit plans, we are talking about somebody's ultimate plan to actually sell the business and retire. And so a couple of the questions that we like to have business owners think about is, when would they ideally like that to happen? Again, back to the who. Who would be the person that we would ultimately sell the business to upon our retirement? How much? How much do we think the business is worth? We're going to talk about valuation plans here in just a moment. But not only how much is it worth today, but what would be the formula that we would use to determine its value in the future? And then a couple other things to think around the money part would be, how is that money going to be paid? Is it going to be a lump sum? Is it going to be an installment agreement? Or is it going to be some combination of lump sum and installment? And again, we'll have a future podcast where we'll be talking about just exit planning, because this could really be its own podcast all by itself.
And how close to that time that someone is ready to sell their business should they start working on their exit plan?
That's a great question, Kellen. And I think the simple answer is to start planning it as soon as possible. There's a book that I read probably about 10 years ago, but still extremely relevant today. And it was called Built to Sell: Creating a Business That Can Thrive Without You. And so if business owners always have the mindset that probably eventually this business is either going to be sold or it's going to be transferred or sold, internally to a family member, whatever the case may be, we want to always be thinking about, how do we make the price of that business as attractive as possible? And part of that is going to be creating a business that can thrive without you. So, Kelly, the short answer to that is really as soon as we can, we should be working towards what that ultimate exit plan is. So why don't we just move to the next document here, because we've started talking about valuations, business, and growth plan. And so I'd like to talk to the audience a little bit about that at this point.
Great, Kevin. Can you touch on where and when a business should consider getting a business valuation done, and also touch on the difference between an informal versus a formal valuation?
Okay, great. Yeah, great question. So let's talk about formal and informal to kind of get started with. And most businesses, unless you're actively in the negotiation process or really close to being able to sell the business, an informal valuation will do. And just really kind of the big difference is price and involvement of time. An informal valuation can be done very inexpensive, if not even free, and is just trying to give the business owner a general snapshot of their current value and how it would be determined in your industry. And I think understanding how it would be determined in your industry is key. And we have found just over the years, business owners that we've worked with, that once they really understand how their business will be valued upon an ultimate sale, whether it's a multiple of earnings, 3 times earnings, 4 times, 5 times, whatever it may be. There's different multiples for different industries. And then the other thing that is a term that we know a lot of business owners are not really as familiar with is something called EBITDA. And it's a EBITDA, and that stands for a company's earnings before interest, taxes, depreciation, and amortization. And I think the interesting thing about EBITDA is many business owners have never heard of that. But once they do hear of it, understand it, and realize that's how their ultimate price of their business will be determined. It's something they start thinking about on a weekly basis. So, and the other thing that maybe that informal valuation gives us is just, again, maybe just a snapshot of what the business might look like now. But, and back to your question, Kel, about when to try and get this done, the earlier, the better, if we can, because not only do we want to understand what the business is worth today, but we want to think and understand around what are the things that we can do between now and when I do ultimately sell to drive the value of that business. So as an example, concentration and diversity of clients. You could have two businesses in the same industry with essentially the same bottom line financials. But if one customer, or if one of the businesses, I should say, if one of the businesses has one client that generates half of their business, and one of their competitors, again, with the same financials, doesn't have one customer that even generates 10% of their business, that client, that business that has the smaller number of clients, or that 150% concentration, that's definitely going to hurt the valuation of the business. So if that's where you find yourself today, a goal obviously would be to create more diversity in your client base moving forward. Another big one is dependency on the owner or one or two key employees. If the owner's working 65 hours a week and they're the marketing department, the sales department, oversee manufacturing, obviously that's going to be an issue when determining valuation, because once the owner, or maybe one or two key people, if they're gone, the purchaser is going to realize they're going to take a hit financially. And so again, that could be part of the planning process, is how do we bring in a team of people to run this, so somebody that purchases the business sees that this business will sustain even after the owner or one or two key employees is gone. And then we talk about things like consistency of earnings. Are your earnings growing? Are they shrinking? So again, it could be its own webcast of just how to enhance the valuation long term. But those are some of the key things that I would point out at this point when you think about valuations and growing valuations. So next, why don't we talk about financial plans?
Yeah, that's another question that we often get asked is when should a financial plan be done?
I think much like the exit plan, the sooner the better, if possible, and ironically together if possible. Because in kind of determining the current or potential future valuation of the company, we need to think about how much money do we think we would net out of the business if we sold it, right? On one end, on the business valuation side, but then on the business owner side, we need to think about, will you net out enough of the sale to get the level of income that you're going to need if you no longer own that business? And I touched on the after-tax net proceeds. I mean, the proper tax planning as part of the financial planning is just absolutely critical to know, based on how you're currently set up, what would you potentially net from the sale of the business? But maybe more importantly, are there changes in the ownership structure, classification, anything that we could do that would help us to net more out of the sale of the business ultimately? Because obviously that's going to help in generating even more money to sustain your income. And then, also obviously we need to look at in the financial plan is what other assets does the owner have that can contribute to their retirement income. So again, lots of things there, where you're kind of going back and forth and saying, hey, here's my personal needs. Let's go back over to the valuation plan and look at that and say, can we generate enough from the sale of business to do that? And then if we can't, then we go back to the valuation plan and say, okay, hey, we need to get more money out of the sale of this business. How do we enhance the value so that I can ultimately net enough out to fund what I want to do on the financial plan side? So those two things, in my mind, go hand in hand, and really created at the same time are great. And then just one other thing on the financial plan would be, between now and the sale, how do we best leverage the business to fund the financial future of the owner? So maybe there's retirement plans, tax sheltering things that we can do within there. And then one of the other things to think about as well, and this kind of goes back to the valuation, is the balance between the business valuation and funding personal needs and goals of the business owner. Because as we know, a lot of business owners use their business to fund some of their personal goals. But when we're doing that, we're taking away bottom line earnings that could be helping us to enhance the value. So that's just something to think about as well. So, and let me just kind of a component of financial plan, but it is really technically a separate document, would be the last document of the 5, which is the estate plan. And this is kind of just where we tie everything together. What are the ownership of the assets? Are there any trusts that need to be created before or after the sale? And then a last important concept on the estate plan would be estate equalization. And that usually comes into play when we've got an internal family transfer or sale. So I've got 4 kids. If 1 or 2 of my kids come in and take over our practice, how do I balance out for the other 2 that were not involved in the business? How do I balance out my estate and make it equal for them if I had 2 of my kids came into the business and took it over? So again, lots of questions and things to look at when it comes to that. But that kind of wraps up really the overview of those 5 essential documents.
Obviously, that sounds like a lot of work to get all those documents in place, Kevin. Many of our business owners want to know who puts these documents together. Does it fall on the shoulders of the business owner themselves?
That's a great question. And, really, this whole process is about assembling a team. There's no one financial professional that is going to be able to execute all of those 5 documents. So this is about putting together a team of professionals, because in the end, we may end up with a business broker or transition advisor, a financial planner, wealth manager, tax professionals that are helping us figure out how to net the most out of this, a state attorney that's obviously working on the estate plan, business valuator that's trying to help us figure out the value of the business. So we generally recommend that there is one of those people that is kind of serving as the general contractor, if you will, for the client. So much like in a construction project where you've got lots of different people working on a building project, that you're not only just assembling these documents for the first time, but moving forward and making sure that as things change, that everything is updated across the board. A general contractor type role is very important. And so maybe I'll kind of wrap this up with this, Cal, for our listeners today that may not be familiar with the Fringe Benefits Group. Let me take 2 minutes to introduce ourselves. We provide financial consulting and advisory services to businesses, business owners, and key employees, mainly around succession, exit planning, and retirement. And when working with business owners and key employees, we feel it's critical to understand and evaluate both the business side and personal side of advice and planning. Many times the tools and resources that benefit key employees and owners the most have to be implemented through the business and are not things that can be done on their own. So if you need to get your 5 essential documents in place or need to have them reviewed, for what you may have already done, we'd be honored to speak with you. We're very experienced in helping business owners through this process and coordinating with the other professionals involved. We work nationwide and consult with businesses on a daily basis, and we literally have access to every professional and every resource needed to execute this whole process from A to Z. So if you're thinking about selling your business or you've been approached by a potential buyer, again, we would certainly be honored to help you walk through this whole process. And I'll close with this, and that's a challenge to the business owners that are listening to this today. And my challenge is this. We know that you work incredibly hard to run your businesses and to make them successful. And we call that working in your business. The challenge is to carve out sufficient time to work on your business. Taking time away from working in your business to put together your ultimate business succession and exit plan. I can assure you that those that depend on you, both in work and at home, will be the real winners if you do. Thanks for listening in today, and we look forward to having you join us in future episodes. Thank you.
Thank you, Kevin.